So for today's deep dive, we're talking about Bitcoin's long-term success, but we're going to skip the charts, the daily news cycle.
Right.
We're focusing on something else, a really surprising structural mechanic. It's called the HODL wave.
That's it. And our mission today is to find a shortcut to understanding why Bitcoin is so resilient.
Okay.
We're basically tracking the life cycle of a coin, how it goes from this volatile short-term thing into something more like protected long-term conviction. The whole system is just built to reward holding.
And the HODL wave is how you actually see that happening.
Exactly.
It's an on-chain measurement, and it segments the entire supply based on just one thing, the last time each coin moved.
Yeah, think of it like an age verification for money. It shows you where the real conviction in the market is.
What's so fascinating is how the design just encourages accumulation, not really trading.
Well, Bitcoin's value is all tied up in its scarcity, right? And that predictable halving schedule. It just creates this economic system where the best thing you could do is pull supply off the market.
So you can almost see the supply in two different layers with this visual.
They can.
First, you've got the highly liquid new coins. This is like the fast-moving surface layer.
Right. These are coins held for less than 6 months. It's all short-term speculation, market noise, hot colors on the chart.
And then below that.
Then you have the old coins, and that's the deep, immovable foundation. It's inert supply, held for a year, 5 years, even a decade plus.
So they're effectively off the market.
Totally off the market. They represent that unshakable conviction, and their existence is what pushes the price floor up for everyone else.
So the main finding for you, the listener, is this. If you're trading, you're playing in that chaotic new coin layer.
Yeah, that surface layer. It's dominated by emotion, by leverage.
And the system's architecture, it just structurally favors people who commit to saving and pull their supply out.
And to succeed, every single Bitcoin has to go through what you could call a mandatory promotion cycle. Phase 1 is the new coin, or the cadet stage.
The cadet stage. I like that. So that's any coin held for less than 6 months.
Yep. That's the proving ground.
And that's where the coin is super susceptible to being sold, right? During a panic or a dip or even a FOMO rally.
Because the owner's conviction just hasn't been tested yet. The whole objective there is just pure emotional survival. You just have to secure the coin until it qualifies for the next stage.
Overriding every single impulse to touch it.
Exactly. And if you survive, you enter phase 2, the maturation. We call it the illiquidity lock.
Okay, so that's from 6 months to 1 year.
Right. And as the coin gets older, its liquidity just naturally decreases and, the holder starts to gain confidence.
That 1 year mark feels really critical here. Are we saying that when it crosses that 12-month line, the asset basically graduates, it changes its entire risk profile?
Precisely. That boundary is like a systemic checkpoint. It shifts the asset from a likely speculative holding to a proven long-term asset.
And that actually helps the whole network.
It reduces market risk for everyone, because that coin is now contributing to the fundamental illiquidity that holds up the asset's value.
And then finally, phase 3, the old coin. This is 2+ years.
This is realized conviction. It means the holder has made it through multiple bear markets, multiple cycles. They've been tested.
And this leads to the final act of that old coin.
It does. When this supply finally moves, it's not a panic sell. It's usually a very planned, strategic exit. It's about realizing generational wealth.
And those huge calculated sales, they provide the liquidity for the next wave of new coin speculators who are just getting in.
Usually right at the peak.
So it's this perpetual and honestly kind of ruthless transfer of wealth from weak hands to strong hands.
It's inescapable. The central conclusion is that the only real path to success is to just accept the crazy volatility of that cadet stage and focus on accumulation.
That's it.
Unshakable conviction is literally the only currency that guarantees you graduate in this system.
So building on that, if we know wealth is transferred at the top of a cycle, from that disciplined old coin holder to the new speculator, what mental groundwork do you have to lay right now to make sure you never become the person providing that final exit liquidity? It's a game won by patience, not by prediction.